Okay, just picture this for a second. You're trying to run like a whole city of supercomputers, but you're using the same electrical wiring your grandparents had. It sounds kind of crazy, right? Well, that's pretty much the challenge the US is facing today, and it's creating one of the biggest, most foundational investment opportunities of this century. So today, we're going to plug into the power grid revolution.
You know, we're all obsessed with the software side of AI, right? The models, the code, all that stuff. But I think we're missing the most fundamental piece of the puzzle. I mean, what's the one physical thing that if you took it away, the entire AI revolution would just stop, dead in its tracks?
Yeah, it's not silicon, it's not even data, it's just raw, massive, uninterrupted power. Think about it. Every single time you ask ChatGPT a question, every time a self-driving car makes a decision, it's burning electricity. And get this, data center power demand is projected to triple by 2030. So to say that demand is exploding, well, that's kind of an understatement.
All right, so to really get our heads around this huge shift, we're going to follow the money and the power. We'll start with what I'm calling the AI gold rush's shovel. Then we'll look at the ultimate toll road business model behind it all. We'll even dive into a pretty wild idea, the crypto energy paradox. After that, we'll get practical with an investor's grid playbook, and we'll wrap up by looking at how this is literally powering the next century. All right, first section, I want you to forget this idea of AI as something that just kind of floats around in the cloud. The reality is way more industrial. I mean, we are literally building the factories of the 21st century. They're these huge, power-hungry server farms, and they're basically the new steel mills, and every single one of them has to be plugged into the wall.
So this is where the real action is happening. The whole industry is shifting from just teaching the AI, which they call training, to actually putting that AI to work. Here's a good way to think about it. Training is like sending the AI to medical school. It takes years. But inference, that's the AI actually reading your X-ray, making a diagnosis, and then doing it 1,000,000 times a day. That's the industrialization of inference, and man, does it need a constant, massive flow of energy 24/7.
Okay, so in this modern gold rush, everybody's talking about the obvious picks and shovels, right? The NVIDIA chips, the fancy cooling systems, but those are all just tools. What's the real foundational shovel that everything else depends on? Well, it's the power grid. I mean, without it, none of this super advanced hardware even turns on. It is the absolute bedrock of this entire revolution.
Okay, so if you've got AI data centers and, the whole EV revolution creating this bottomless pit of demand for power, who's actually selling it to them? The answer leads us to one of the most unique and powerful business models in the entire world.
Just stop and think about this for a second. You can switch from Coke to Pepsi, right? You can choose a Ford over a Toyota. But can you choose an alternative to the power grid? No way. It doesn't matter if your electricity comes from a solar panel or a nuclear plant. It has to travel down the same wires to get to your house or to that data center. And that right there is a super powerful, inescapable economic fact.
And this creates a business model that pretty much any other industry would kill for. Let's just walk through this. So, typical companies, they're constantly fighting off competitors, getting into these nasty price wars. The grid? It's a natural monopoly. For other businesses, their products can be substituted. But electricity? It's essential. You can't substitute it. And while demand for, say, cars or clothes can go up and down with the economy, our need for electricity is constant. And, as we've already talked about, it's growing like crazy.
And here is the absolute core of that business model. So, because utilities provide this essential service, they're regulated by the government. But here's the trade-off. This is the important part. In exchange for that regulation, they are legally guaranteed a profit on the money they invest in building and maintaining the grid. The whole system is designed for one single purpose: to attract the trillions of dollars needed to keep the lights on and build for the future. It's slow, it's steady, and it is incredibly powerful.
Okay, so we have this stable, powerful business model all set to meet this new demand. But the source of that power is changing. The grid of the future has to be green, and that introduces a huge new problem. A problem that, and this is where it gets weird, an unlikely player, Bitcoin miners, say they can solve.
So what's the biggest challenge for renewables? It's really simple. They're intermittent. The sun goes down right when everyone gets home from work and turns on their lights. The wind might be blowing like crazy in the middle of the night when nobody needs the power. This mismatch between when power is made and when it's needed is the single biggest thing holding us back from a 100% renewable grid.
Okay, so here's this really radical proposal that came from folks at Square and ARK Invest. You start with the problem, right?
Solar and wind sometimes make way too much cheap power that nobody can use. Then you bring in the Bitcoin miners. They're like the perfect customer. They don't care where they are, they just want the cheapest electricity they can find. So the solution is to put the miners right next to the solar and wind farms. They act like a giant energy sponge, soaking up all that extra power. Suddenly, what was a wasted resource is now making money for the renewable project. The whole argument is that this makes green energy profitable faster, and that speeds up the entire transition.
I mean, on the surface, it sounds like a perfect win-win, a really clever solution to a tough problem. But there's a catch. And according to the people who've really dug into the numbers, it's a big one.
Yeah, so the critics who ran the numbers on this proposal came to a pretty shocking conclusion. They found that to make this whole system work, you'd have to build so much renewable energy that a staggering 83% of all the power being generated would go just to mining crypto. That creates a huge conflict of interest. I mean, think about it. If it's more profitable to mine Bitcoin, why would you ever sell that power to the public grid when there's a heat wave? Society would basically be left fighting for the leftovers, just hoping the miners feel, altruistic enough to keep the AC on.
And listen, this isn't some far-off theoretical problem. Right now, today, the global Bitcoin network uses about 129 terawatt-hours of electricity a year. To give you some perspective on that number, that is more than the entire country of Sweden. It just shows you the enormous scale of energy we're already talking about, and it's why there's this huge debate about whether this is a bug or a feature.
Okay, so we've got this picture of massive, undeniable demand coming from AI. And it's colliding with this really complex and, frankly, controversial variable from the world of crypto. So as an investor, how do you cut through all that noise? How do you actually make a bet on the picks and shovels of this whole power revolution?
Well, for most investors, the simplest way in is through what are called exchange-traded funds, or ETFs. You can just think of them as baskets of stocks. The classic one is XLU. That gives you broad exposure to the whole U.S. utility sector. It's really the benchmark. Now, if you want to get more specific, there's an ETF like Power, which focuses just on the companies building and maintaining the grid. Or you could flip the whole thing around. You could invest in the AI boom with something like AIQ and then use a utility fund as a hedge. You're basically betting on the tech and the infrastructure that powers it. The sector also has this really fascinating seasonal rhythm to it. If you look at the historical data, utility stocks often have their best month in July. Traders even have a name for it, the summer rip. And the reason why is beautifully simple. It gets hot, millions of us turn on our air conditioners, that drives up electricity demand, boosts revenues for the utility companies, and, often, their stock prices follow. It's this really direct, predictable link between the real world and your portfolio.
But it's super important to understand what you're actually buying here. Utilities are the tortoise, not the hare. You don't buy them expecting them to be the next big rocket ship growth stock. No, you own them for their stability, for their consistent dividends, and because they tend to hold up when the rest of the market is going crazy. They're the ballast in your portfolio, not the sail.
All right, let's zoom all the way out for our final point and really put this whole transformation into its proper historical context, because this isn't just about how one sector is performing, it's about the very foundation of our entire economy.
And, history gives us a pretty clear roadmap here. Every single great economic revolution was built on top of a new kind of foundational infrastructure. Back in the 19th century, it was the railroads, right? They connected the nation and made fortunes. Then in the 20th century, it was the interstate highway system, which made modern commerce possible. The parallel for our century, it's just undeniable. It's the modernized, intelligent power grid. That's the foundation for the digital age.
And so that leaves us with a final, pretty powerful question to think about. Investing in the grid, it isn't just about buying some utility stocks. It's really a bet on the single most essential foundation for every single technological leap we're going to make this century. The last revolution was built on steel and oil. This next one, it's being built on electricity and data. The only question is, are you ready?